Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm from the AlgoBot team, and today we're studying an expert advisor called Candle Triad Ignition. This is a pure price action strategy. It reads the geometry of the candles themselves, and it uses the average true range only to measure volatility. Over the next few minutes, you'll learn how it spots a quiet, coiled market, how it recognizes three conviction candles breaking out together, and how it places its protective stop and profit target. Remember, this is educational content only and not financial advice. Let's start with the big picture. Candle Triad Ignition is a breakout continuation expert advisor, and it belongs to the pure price action family. That means it doesn't rely on a moving average crossover or an oscillator to decide when to act. Instead, it reads the raw shape of the candles, their bodies, their wicks, and where they close relative to one another. The only indicator involved is the average true range, and even that is used purely to measure how volatile the market currently is. It never generates an entry by itself. The central idea is simple and time-tested among discretionary traders. The cleanest breakouts tend to be born from quiet, not from a move that has already run a long way. So the strategy first looks for compression, a tight base, or coil, where price has been squeezed into a narrow range relative to its recent volatility. When a market has been coiling like that, energy is building, and a decisive push out of the range can mark the start of a fresh directional move. Once that quiet base is in place, the EA waits for three consecutive conviction candles, the triad that gives the strategy its name, to march out of the base in the same direction. If they push upward and clear the top of the coil, the strategy signals a long. If they press downward and break the bottom, it signals a short. Because everything is derived from candle geometry and volatility, this approach can be applied to whatever symbol and time frame you choose to test: foreign exchange pairs, indices, metals, and more. It's best suited to traders who are curious about structured, rules-based breakout logic and who want to study how compression and expansion interact. As always, this is an educational breakdown, not financial advice, and trading always involves the risk of loss. Let's walk through the mechanics step by step. The EA makes one decision per newly closed bar, so it isn't reacting to every tick. It waits for a candle to finish before evaluating anything. It also keeps just one position open at a time, and once a trade is live, the stop loss and take profit manage the exit on their own. First, the strategy calculates the average true range over the ATR period, which defaults to 14 bars. This gives it a live read on volatility that scales everything else. Next comes the coil test. The EA measures the highest high and the lowest low across the base period bars sitting directly beneath the most recent three candles. The default base period is 6. It then checks whether that entire range is smaller than BaseFactor times the ATR, with BaseFactor defaulting to 1.5. If the base is wider than that, the market isn't compressed enough, and the strategy simply waits. This is the quiet before the move filter. Then the EA examines the triad, the three most recently closed candles. For a long setup, all three must satisfy three separate conditions. Each must be bullish, closing above its open. Each must have a dominant body, meaning the body is at least BodyFrac of the candle's full range, 60% by default, so the candles show real intent rather than long, indecisive wicks. And none of the three may be overextended. If any candle's range exceeds blow-off factor times the ATR, defaulting to 2.5, it's treated as a climactic exhaustion candle and the setup is rejected. The goal is to join a move that is just beginning, not one that is already spent. On top of that, the three closes must step progressively higher, the second closing above the first, the third above the second, confirming a genuine advance. Finally, the third candle must close clear of the top of the coil. That's the actual breakout. When every one of those conditions lines up, the strategy signals a buy. The short side is a perfect mirror. Three bearish candles with dominant bodies, progressively lower closes, none overextended, and the third closing below the base low. Risk is defined structurally. For a long, the stop sits just below the lowest low of the three triad candles, padded by stop buffer times ATR, a quarter of an ATR by default. The take profit is placed at RewardRisk times that measured risk, defaulting to a reward to risk of 1.8. The short side mirrors it exactly. Here's the heart of the code as it appears in MetaEditor. At the top are the input parameters you can adjust in the strategy tester. Base period and BaseFactor define the coil, how many bars form the base, and how tight it must be relative to ATR. BodyFrac sets the minimum body-to-range ratio for a conviction candle, and blow-off factor caps how large a candle can be before it's considered overextended. ATR period controls the volatility reading. Stop buffer pads the stop. RewardRisk sets the target multiple, and lots is the fixed position size. Now look at the bullish block. The Boolean called bull triad is true only when all three strong body checks pass in the up direction, when the closes step higher, C2 above C1 and C3 above C2, and when C3 closes above base high, the top of the coil. When that's true, the EA reads the ask price as the entry, finds the lowest low of the three candles, sets the stop just below it minus the buffer, computes the target as reward risk times the risk, and calls trade.buy with those stop and target levels. The bearish block is the mirror image. Bear triad is true when the three candles are strong to the downside. The closes step progressively lower, and C3 closes below, base low, the bottom of the coil. Then the EA takes the bid as the entry, finds the highest high of the triad, places the stop just above it plus the buffer, sets the target below the entry by the reward to risk multiple, and calls trade.sell. Both sides are symmetric, and both hand the exit entirely to the stop and target. Let's bring this to life on the chart. On the left, notice how the first few candles are small and overlapping, drifting sideways inside a narrow band. That shaded region is the coil, or base, the compression the strategy is waiting for. The candles here have tiny bodies and barely make progress in either direction. Relative to the average true range, this range is tight, which satisfies the base test. The market is quiet, and the strategy is simply watching. Now watch the next three candles. The first one opens near the top of the coil and closes noticeably higher, with a full, dominant body and only small wicks, a conviction candle to the upside. The second candle opens where the first closed and pushes higher still, closing above the first candle's close. The third candle continues the march, closing above the second and, crucially, closing clear of the top of the coil. These three green candles are the triad. All three are the same color. Each closes beyond the one before it. Each has a dominant body, and none of them is overextended into a climactic candle. That final close above the base is the breakout the strategy has been waiting for, so the buy entry marker appears on that third candle. Look at where risk is defined. The stop loss sits just below the lowest low of those three triad candles. Padded by a fraction of the ATR, you can see it resting beneath the structure of the breakout. The take-profit target is projected above the entry at the reward-to-risk multiple, which defaults to 1.8. In other words, the potential reward is set at roughly 1.8 times the distance down to the stop. Now follow the move. The two candles after the entry continue upward with healthy bodies, carrying price into the take-profit level. The take-profit marker shows where that long trade would close in this illustration. The strategy joined the move just as it emerged from quiet and rode the continuation to its target. After that push, price stalls and begins to consolidate again near the highs. Watch how the candles tighten into a second small coil, bodies shrinking, range narrowing. Once more, the market is compressing, and once more the strategy waits for a decisive move out of the base. This time the break comes to the downside. The first of the next three candles is firmly bearish, closing below its open with a dominant body. The second closes lower than the first, and the third closes lower still, and below the bottom of this second coil. That's a bearish triad. Three red candles of the same color, progressively lower closes, dominant bodies, and none of them overextended. The third candle's close beneath the base marks the downside breakout, so the sell entry marker appears there. The risk is defined in the mirror image. The stop loss sits just above the highest high of the three bearish candles, padded by the ATR buffer, and the take profit is projected below the entry at the same reward to risk multiple. Follow the final candles. They extend lower with solid bodies, carrying price down into the take profit target, where the short trade would close in this example. Notice what both sequences share. In each case, The strategy did not chase an already running move. It waited for the market to go quiet, insisted on 3 genuine conviction candles stepping out of that quiet together, and only then committed, with its stop anchored to real price structure and its target set by a fixed reward-to-risk ratio. That discipline, joining expansion right as it emerges from compression while rejecting exhausted candles, is the entire idea behind Candle Triad Ignition. Of course, not every breakout follows through, and losses are a normal part of any strategy. That brings us to the end of our breakdown of Candle Triad Ignition. We covered how it looks for a tight, coiled base, how it recognizes a triad of 3 conviction candles breaking out together, and how it anchors its stop to real structure while targeting a fixed reward-to-risk multiple. We also walked through the actual MQL5 code and a full long and short example on the chart. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation to trade. Every strategy carries risk, and losses are part of the process. If you found this useful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MT5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.